Are you tired of feeling stuck in a financial rut, watching others thrive while you struggle to break free? You're not alone. Most people aren't taught the real secrets to financial success, but that doesn't mean you can't change the game. Warren Buffett, one of the wealthiest individuals of all time, didn't get there by chance. He built his empire with a mindset that anyone can learn. If you're ready to stop chasing quick fixes and start building a championship-winning financial future, this is the moment you've been waiting for. You see, Buffett's approach to wealth isn't about risky gambles or luck. It's about consistency, discipline, and smart decisions over time. Think about it. What if, instead of trying to get rich quick, you took a long-term view of your finances? What if you made strategic moves, one after another, until you finally reach that financial freedom you've been dreaming about? This isn't just a dream. It's a strategy, and today, I'm going to show you how to play the long game just like Buffett. The best part? You don't need a ton of money to get started. You just need the right mindset, the right habits, and the willingness to stick with it, even when things get tough. Whether you're trying to figure out how to invest, how to get better at managing your money, or how to build wealth that lasts, you'll find everything you need to take control of your financial destiny. Ready to start? Let's dive in. By the end of this, you'll be equipped with the exact steps you need to take to transform your finances and set yourself up for long-term success. It all starts with adopting the right mindset, and I promise, once you understand this approach, you'll see your financial journey in a whole new light. So, let's get started. When it comes to building wealth, it's easy to get distracted by all the flashy promises of quick wins. But if you want long-term financial success, think of it like a sports season, not a single game. Warren Buffett's approach to building wealth isn't about chasing the next big thing. It's about making consistent, smart decisions that pay off over time. Just like a championship team doesn't win by relying on a lucky streak, your wealth grows when you stick to a solid, strategic game plan. Focus on steady, thoughtful investments and the magic of compounding interest. You might be wondering, why does it take so long? Well, think about it this way. If you're saving $500 a month and earning an average 7% return, after 10 years, you'd have over $85,000. Now, imagine what it would look like in 30 years. But this only works if you stay in the game, avoiding temptations to pull your money out for quick, risky gains. It's all about that slow, steady climb, not rushing for a quick win. A great example of playing the long game is real estate. People who invest in property and hold onto it for 20 to 30 years often see incredible returns because they allow the property's value to grow steadily. Similarly, if you're focused on growing your income, a side hustle or business that grows little by little will eventually pay huge dividends. Don't let impatience derail your journey, think big picture. In the end, it all comes down to mindset. Shifting from a mentality of instant gratification to long-term success requires discipline. It's like a marathon, not a sprint. And just as in sports, consistency is key. So, are you ready to ditch the temptation of quick wins? The next step is learning how patience and discipline can be the game changer for your financial strategy. Stick around! Patience and discipline are key in the financial game, just like in sports. Think about your favorite athlete. They didn't get to the top by making impulsive moves or reacting to every setback. No, they stuck to a routine, trained every day, and trusted the process. The same goes for your finances. If you want to build wealth, you need to stick to your financial plan, avoid emotional decisions, and remember that success takes time. Whether it's investing, managing debt, or growing your income, patience and discipline are your best friends. Have you ever made an impulse purchase or panicked during a market dip? We all have, but that's where discipline comes in. Buffett's advice is simple: don't make decisions based on emotions. It's easy to get caught up in the highs and lows, but the best investors know to stay calm, even when the market is crazy. And the same goes for your personal spending. If you stick to a budget, avoid splurging on things you don't need, and make disciplined choices, your wealth will grow over time. For example, imagine you're investing in stocks. When the market drops, many people panic and sell, losing out on the long-term growth. But disciplined investors stay the course, knowing that short-term fluctuations don't matter if the company is strong. One solid, long-term investment strategy is dollar-cost averaging. It's a simple, disciplined approach where you invest a fixed amount regularly, no matter what the market is doing. Over time, this reduces the impact of market volatility and helps you stick to your plan. Discipline also plays a huge role in creating passive income. If you're working on building multiple streams of income, it takes time. It's not going to happen overnight, and there will be days when it feels like nothing is moving. But trust in the process. Discipline helps you stay consistent, make smart decisions, and follow through on your goals. So, how disciplined are you in your financial journey? Next, we're diving into how you can study the game before making any moves, and that's where real success starts. Stay tuned! Before diving into any financial decision, it's important to study the game. Warren Buffett doesn't make random moves. He spends hours researching companies, reading reports, and analyzing market trends. This level of commitment is crucial if you want to succeed. Whether you're investing in stocks, real estate, or even starting a business, the more informed you are, the better your chances are. Knowledge is power, and when you're informed, you make smarter decisions that lead to long-term success. Imagine you're thinking about investing in a new company. Instead of blindly following the latest trends or stock tips, take the time to dig into the company's financials, leadership, and market potential. Read books, follow experts, and learn about the industry. A good resource for learning the ropes of investing is The Intelligent Investor by Benjamin Graham. This book is a classic, providing solid principles to help you make smarter investment choices. The same principle applies when you're starting a business. If you want to build wealth, you can't just dive in without understanding your market or your customer base. Take time to research, develop a solid business plan, and talk to others who've been through it. The more you learn, the more equipped you'll be to navigate challenges. This is the kind of knowledge that separates the successful from the ones who fail. Studying the game isn't just about gaining knowledge, it's also about learning to think long-term. In the world of investments and financial growth, decisions made today can have a massive impact years down the line. By taking the time to learn, you're not only avoiding mistakes but also positioning yourself for a prosperous future. So, get ready to dive into some research. Next, we're going to talk about controlling your emotions like a pro athlete. Trust me, this one's a game changer. Emotions are one of the most powerful forces that can make or break your financial success. Warren Buffett is known for his calm and steady demeanor, especially when market fluctuations are at their peak. He doesn't let fear or greed dictate his decisions. If you want to succeed in finance, developing emotional control is key. Think of it like training for a sport. Learning to stay composed under pressure is a skill that can make all the difference. When the stock market dips or your investments take a hit, it's easy to get emotional. You might feel panicked or tempted to sell everything out of fear of losing more money. But that's exactly when you need to stay cool and avoid knee-jerk reactions. Instead of focusing on the temporary losses, look at the bigger picture. Ask yourself, what is this investment's potential over the next 5, 10, or even 20 years? Shifting your mindset from fear to opportunity is essential in building wealth. Take the example of real estate. If you've invested in property and the market takes a downturn, your first instinct might be to sell quickly. But if you can maintain emotional control and keep the long-term perspective, you could ride out the storm. Many investors have made huge profits by sticking with their investments and not letting fear dictate their choices. Keep your cool, make rational decisions, and focus on the bigger picture. Emotions are temporary, but smart decisions will pay off for years. The ability to control your emotions is something you can train over time. One way to start is by practicing mindfulness techniques to stay present and calm, no matter what's happening in your financial world. Remember, in the game of money, the best players are the ones who can stay focused and avoid emotional distractions. Speaking of focus, next we'll dive into investing in yourself before anything else, a crucial step for long-term success. Warren Buffett has said time and time again that the best investment you can make is in yourself. It's not the flashy stocks or high-risk ventures that pay the highest returns, it's the knowledge and skills you build. Think of it like planting seeds. The more you nurture your own growth, the stronger and more fruitful your future becomes. Whether it's mastering new financial habits, improving your education, or learning how to manage your money more effectively, investing in yourself is the foundation of long-term success. In the financial world, there's a lot of talk about getting rich quick or hitting the jackpot. But what Buffett emphasizes is that wealth doesn't come from chance. It comes from constant improvement and learning. If you want to get ahead financially, you need to make sure you're always growing. Read books, attend seminars, take courses, whatever it takes to broaden your financial understanding. The more educated you are, the better financial decisions you'll be able to make. One example is investing in financial education. Instead of spending money on things that depreciate, like expensive gadgets or unnecessary luxuries, use that money to learn how to build wealth. Courses on personal finance, books like The Intelligent Investor by Benjamin Graham, or even financial podcasts can all help you gain the knowledge you need to make smarter decisions. This kind of investment doesn't just pay off once, it multiplies over time, making you more confident and capable in handling your finances. By focusing on personal growth, you're ensuring that you're not just relying on external factors to succeed. You become your own best asset. As Buffett says, the more you learn, the more you earn. This mindset shift is what separates those who succeed from those who stay stuck in the rat race. With your new knowledge, you'll be ready for the next step, managing risks like a pro. In the world of finance, just like in sports, avoiding mistakes is as important as making the right moves. Warren Buffett has always been cautious about the risks he takes. He doesn't gamble, he strategizes. The idea is to minimize losses as much as possible. When you're starting out on your financial journey, it's tempting to take risks that seem like shortcuts to wealth. But, much like a rookie athlete trying to make a splash, taking unnecessary risks can derail your entire financial plan. Take high-risk investments, for example. Sure, you might hear about someone who got lucky with a risky stock or crypto, but for every success story, there are hundreds of failures. So, what can you do? Stick to investments that make sense for your long-term goals. Think of it like the tortoise and the hare. It's better to take it slow and steady, investing in things like index funds, real estate, or building a business with proven systems. These are your financial safeguards. Managing risks also means protecting yourself from bad debt. Credit card debt, payday loans, and other high-interest financial traps can crush your progress if you're not careful. To avoid these, start by budgeting effectively and living below your means. Get in the habit of saving a portion of your income every month, even if it's just a small amount. By doing so, you're setting yourself up to avoid situations where you have to rely on high-risk debt to cover expenses. Finally, a big part of managing risks is knowing when to say no. In Buffett's case, he's always said no to investments that don't fit his criteria. He only invests in businesses he understands and believes in. Apply the same principle to your life. Learn to say no to financial temptations that don't align with your goals. When you learn to manage risks like this, you're building a sturdy foundation that will serve you well as you move forward in your financial journey. When Warren Buffett talks about money, he's always stressing that every dollar should have a job. He doesn't just throw his money around or let it sit idle. Instead, he ensures that every dollar is either earning interest, growing through investments, or creating opportunities. Think of your money as a sports team. Each player, dollar, has a role to play in achieving the ultimate goal, financial success. One of the easiest ways to make your money work for you is through investments. Whether it's stocks, real estate, or even starting your own business, every investment should be seen as a team player. Imagine investing in a rental property that brings in steady rental income. That property is now working for you, paying you monthly, while also increasing in value over time. It's like having a star player on your financial team. Another way to maximize your money's potential is by focusing on creating multiple streams of income. Maybe you have a 9-to-5 job, but you're also working on a side hustle or investing in dividend-paying stocks. These side projects are additional team players in your financial strategy, contributing to your overall success. Just like in a game, relying on just one source of income can be risky. Diversifying your efforts means you're not putting all your eggs in one basket. But making your money work also involves understanding compound interest. The longer your money has to grow, the more powerful it becomes. That's why it's crucial to start investing as soon as possible. Even small amounts can snowball over time, just like a player's growth from rookie to all-star. By being strategic and making every dollar count, you'll ensure your financial team is always performing at its best. Now that you've learned how to approach your finances like a champion, it's time to take action. Remember those days when you felt overwhelmed by your financial situation? You've already taken the first step toward breaking free from that cycle. The mindset and habits we've talked about are the foundation of your new path, a path that leads to sustainable success and true financial freedom. But this is just the beginning. If you're serious about turning these principles into tangible results, there's one more thing you need. Hit that subscribe button and turn on notifications to stay up to date with tips that can transform your relationship with money, mindset, and long-term wealth. Now, if you're ready to take it to the next level and start building passive income streams, eliminating debt, and maintaining mental clarity under financial pressure, I've got something special for you. Check out the material in the pinned comment below. It's packed with actionable insights that will help you take control of your money and life. Don't wait any longer to transform your financial future. The time is now.